Hi there, Andrew Thompson here from Precision Market Trading. Well, oh dear, what a week it's been. BHP is getting smashed, decade lows, banks are heading down. It seems all doom and gloom. Um, as you know, we went long on this low here. Went up about $4 in a couple of weeks. We came back down again. We managed to get out by the skin of our teeth. We made a few dollars, but not as much as we anticipated. We left a lot of profit on the table, but we got out with our skin. That's the beauty of the way I trade and analyze the markets. I get in very, very close to the inflection points, the major changes in trend. So if I am wrong, I got minimal risk. I'm not getting caught halfway up here where I'm risking $4 or $5 before I know I'm wrong. I'm right on the low, and as I go up, I move my stops up and I protect my profit. But anyway, here we are at the low, and I'm lucky I've got some children because I'm putting the Cajonis on the line here. I'm putting this out as a major low. I'm doing it for a few reasons. This is a weekly chart. These are the tops post GFC. I don't like these numbers. Basically, they're distribution numbers. When they floated off South 32, all the numbers changed. This top was $50. Now it's 45.30, but we are given what we're given. The important thing is, the main thing is time does not change. And time, as I've said numerous times, is more important than price. And we have a double bottom, basically. We've got the two lows down here. 1812 back in '08, and we've got Friday, which is yesterday's low at 1981. So over a period of that time frame, that's a double low for me. And I love the midpoints and double bottoms and double tops. And we go from the all-time top, smack bang down here into the midpoint. Guess what? We got 1442 degrees. That's 10 times 144. I'm not going to go into that. You've seen what I've done with that. Look at Leighton's or Simic now. They all made that time. It works wonderfully. So we've got the major period in between here is 1441. Okay. We've also got the major price from the '08 top to the '08 low, which was $27.18. That's the range down. That did it in 6 months. Terrible if you were long, great if you were short. But what I'm liking about it is from that top to yesterday's low was 27.37 days, or 26.94 7 degrees, basically 26.95 degrees. And once again, I've said many times, when I've got long periods like this, I go to the average. The average of these two is 27.16. So the average of the time down is 27.16, which squares out with the range of the price down. So you had the range. So the market always gives you signals before it has its next turn. All the market is a reflection of the past. So this range down was $27.18, and from the same top to this low, the average was 27.16 periods of time. So this range is giving you the low. And coming up here, this range from this top, once again, down to yesterday's low, was $25.49. Okay, and the time between these two lows, big double bottom lows, was 2,548 days. So what we're looking at is basically 1 cent difference, or 1 day's difference between the two. So what I've got is I've got the major range down here all those years ago, giving us the time over here to within 1 day, 2 days. I've got the double bottom coming through here, and the midpoint giving me my favorite 1441 number. And I've got the time over here equaling the range again over this way. Also, just as an aside, I've got my 364 bars, which is 360, 365, which is a circle, which I've talked about many times. So for me, this is a buy. You got a chance to get right in on the low, because this was yesterday. This is price action as it's happening. This is not after the fact. This is the way I trade. I have to take this trade. If I don't take this trade, I cannot pigeon. I cannot cherry pick these trades. I have to take every single one. Otherwise, there's no point doing it. So come Monday, I have to go long. And because I'm getting close to the low, if I'm wrong, my risk is minimal. Goodbye for now.